All right, let's go to the next segment. And here, oh, okay, we still have some time. Okay, so here we're going to continue our discussion of the significant bar and significant bar reversal. We started last time. Hold on a second, guys. Oh yeah, I see. So all of these questions, Q&As, are all about significant bars. So that's great. All right, first question comes from Simon. Simon is asking, when you were discussing the last commitment to the upside and last commitment to the downside, I assume these are significant bars themselves. Additionally, when a reversal has occurred, this is based on another significant bar that takes out the previous significant bar. Is this correct? Yes, absolutely. So we are looking for a last commitment to the upside on the significant bar with the close like this. And if we have other bars that are going to have, let's say, some attempts to commit, but where the close is actually within the body of the previous significant bar, then this is not a commitment for us. This is just an attempt to commit. And therefore, the reversal of the bias is going to be a bar, a significant bar, in the opposite direction, which closes below the commitment line. So close is lower than the commitment line. That was based on the low of the last significant bar to the upside. What is happening here in terms of institutional presence and what do they do? So on the way up, we see that professionals are still committing to the upside, and then after the reversal, we see that a lot of them have changed their bias and they sold. They either sold their position that they have, or they opened a short position, and that's what produces that reversal. So we want to see that reversal based on the two significant bars. One is in one direction, and the other one, the reversal one, is in another direction. And obviously, we want to see the volume signature. The volume signature could be high in both cases, because if this is the reversal, think about the value investors selling into the strength, and then the momentum and ITFs, trend followers, are going to sell on the way down, and that's going to create that synchronicity. I want to jump to Eric's question here right away. Eric is asking, does a reversal bar necessarily need to be a significant bar, or is it a close above a significant bar that is sufficient to be classified as a reversal bar? So we're discussing a situation where we have that loss commitment to the upside, maybe some other bars, and then a big bar to the downside, significant bar that commits below, right? So we see that commitment below this line. So this is our significant bar reversal. What Eric is describing here is something like this. What if we have that big bar, and then instead of a big down bar, maybe we have a bar like this that is being followed by other bars like this, and then suddenly we see that on one of the bars, which is not a significant bar, there is a commitment to close below. Would that be considered a reversal? Well, the idea here, Eric, is just to combine significant bars, and we're going to go through this exercise today, and we'll do that. So we want to, let's say, maybe combine these two into one single significant bar, and we'll talk about how we do this. So now, when we look at this, we probably would say that there is a significant body and therefore a significant commitment to the downside. So then we could say that indeed we have committed to the downside. So I would be looking for those type of situations where maybe there is no commitment on a single bar, but both bars have the characteristics of maybe semi-significant bars, right? So there is still a progression to the downside, and every time there is some kind of at least commitment above the previous low of the previous bar. Then we can combine them. All right, another question on testing. With reference to the significant bar below, you outlined that a possible point of entry is a significant bar down. Would we ideally await the test and confirmation? The significant bar down is an action, and we would then await for the confirmation. If we were to wait for the test and confirmation, which of the bars below would this be as? Okay, and we need to look at that chart, but we're going to look at another chart and we're going to bring up the same question. And then the last one, is it the above point of entry method really is the above point of entry method really based on your trading style of conservative versus aggressive? I wouldn't be saying that, I define the reversal as a conservative or aggressive style, but now that you're asking me, I think this is more conservative style, not necessarily aggressive. Because if you think about how the significant bars act, so here is a slide for us. This is going to be an exercise. Hold on a second. We've done this exercise. We did this with Eric, I think, before, or with someone else. Okay, so then we're going to go to somewhere else, another exercise. Think about the reversal of that significant bar, and this is a weekly, as a confirmation that the reversal has happened. But before that, there might be some bars that are showing us the causality of that reversal. So therefore, if we would define, let's say, these two bars as a combo bars, and we are going to say that this is going to be a reversal and it's going to be a confirmation of that reversal of the swing to the downside, let's say like this. Why is that? Well, we had, what is the last commitment to the downside that we see? Well, this is a very clearly defined commitment to the downside. So we would need to reverse this bar first, and this bar does it. But also, after another intermediate high, we have this bar committing to the downside, and we need to reverse that. And we're seeing that these two bars are reversing. So we have one significant bar and then the second significant bar, both are confirming that the reversal has happened. It's just this confirmation comes at different price levels and for different, commitment lines. So from that perspective, a confirmation would always be thought as a more conservative approach rather than aggressive. Where the aggression could come and where it should come is something that we've discussed before. It's on the way to the buying climax. This is where we want to be aggressive with the significant bar technique. We just want to basically staircase the movement of the stop loss and exit as close to the top as possible. Why is it possible to do it in this way? Well, because this wave is a speculative wave. And therefore, there's going to be a lot of momentum and a lot of velocity on this movement, which is going to be basically an attempt to push the price as much as possible in the shortest period of time. So here we see ×2 or plus 100% from $25 to $50, and we just basically want to follow each week and just move the stop as a staircase, because we recognize this is a concluding to the whole uptrend move. And then we will study those moves, in the upcoming classes as to how those moves are going to develop, from the momentum move to the absorption move and then to speculative moves. So aggression here is extremely important. You could be aggressive here. With this aggression, you would have to look at the trading range and go to the daily and then look for the reversal on the daily. And then this would be a more aggressive approach. Now there is a trick here. If we are so aggressive that we are looking for, let's say, into the interpretation of the trading range for the bias, and we set the bias as up, and we're looking at the daily, then we are coming in on the significant bar reversal somewhere in phase C, preferably, and then we are entering this position. So then how could we confirm possibly on the weekly that we are done and that we can use the weekly stop losses? How could we produce that switch from daily to weekly? And this is a great topic for us to talk about now that I remember that we've done this exercise. So I'm gonna pick up any of the stocks that you guys want. So give me one symbol of the stock and I'm just gonna pull up the chart. And then we'll go from there. All right, I don't know what's going on with the top of stock charts. Kind of funky today for me. All right, and I wanted to do a little bit differently. Okay. Okay, all right. Okay, so I don't like how it's done. Okay, so this is what we're gonna do. I don't need this. Okay, and we are gonna do this. Then we're gonna have a second one. All right. Oh my God, what is going on with me today? I'm sorry, guys. When I have two charts of the same stock. Okay, so let's do this. And then and the second chart that we're going to have here is going to be our weekly chart. Okay. Ooh, this is really difficult. All right, so we probably need something like this. All right. Wow, it took me a while just to do this simple task. All right, so let's look at the weekly first. A popular stock right now, momentum stock. A lot of interesting comments about this. So we're looking at the original trading range after the IPO. So everything develops really nicely with how the IPO first is being sold by the underwriters, then is being sold by the insiders, and then is being accumulated by institutions. Not only they're accumulating the stock during the consolidation, and we could see this from different volume signatures, and all of it, just shows a lot of buying. And they also get into this position on the way up. This is one of the things that I keep mentioning to you guys. And again, it's a little bit unconventional from the, like Wycliffe perspective, or rather how we were taught, like that accumulation should happen in the trading range. No, not necessarily. I see a lot of instances where accumulation actually happens on the way up. And those are the stocks that usually extend their runs significantly, rather than accumulation during, the trading range. And a lot of stocks have actually both. They're being accumulated during the trading range by the value investors mostly, and then they are being accumulated on the way up by the growth and by the momentum investors. And that's exactly what we're seeing here. All right, so for us, the key, we're going to look into, within the context of the long-term picture here and the long-term structure, I want to look on the daily here. And I want us to understand that maybe this supply right here meant that we are in phase C and we're looking for the test. So let's look into this area right here, find the point of entry on the significant bar, and then let's do this switch to weekly. And let's see where it's going to bring us, right? Okay, so let's do all of that. A volunteer? Say yes. It can't be just me talking, so say yes, 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 yes. And then we'll go from there. All right, let's go. Sharon, I haven't heard you for a while. How are you doing?
I'm doing well. How are you doing?
Good. Everything went well with the rest of the conference in San Francisco?
Yeah,
Yeah?
it was good. It was fine.
Great. I'm so happy that you've enjoyed it. Was happy to see you, to talk to you.
Same here.
Absolutely. Okay. All right, so let's look at this trading range. Now we know where it is. So it was here in 2018, 2017, I'm sorry. Okay, and I'm just gonna give you guys a little bit more context here. So let's start with the sell-in climax, and then we're gonna go into, let's say, maybe like this area right here. So again, Sharon, we're looking at the stopping action, climactic action, and then we go into the trading range, and we said that we want to start our analysis somewhere here. So how would you interpret this decline and what comes next?
Okay, it's probably some people getting out early,
Mm-hmm.
but and I guess maybe one or two groups who think it's time to get out, and the others are like, no, it's time to stay. So once there's a stopping action here.
I'm sorry, I'm laughing. That was such a great comment. Yeah, but in the essence of what is happening around this area, that's exactly what happens. I mean, like Sharon has described it in her own words, but think about this move to the downside as a partial capitulation by some of the institutional hands. So partial capitulation by institutional hands. And usually when we see that type of capitulation in the trading range, we would be thinking, what type of institutions are actually giving it up? Why would they be giving up the position that we already know in retrospect would be going up? They just don't believe that this is either the beginning of the move or the bias is up. But what kind of institution would do that, right?
Well, the algorithm traders certainly, of course, they don't do it themselves. It's just done automatically. But
Yeah, institutional algos, they
yeah,
will be driven by the momentum, so they will accelerate this move to the downside. So that's great. Who else do you think, Sharon?
we
What
can.
about the value investor? Would the value investor give up the position on this move to the downside?
I don't think so.
I don't think so either. What would the value investor do?
Probably just sit on it.
Yeah, they've acquired some on the way down. Remember that value always tries to buy on liquidity and pushes to the downside, right? In the trading range. So they bought there, so something here, something here. This is just supply, supply, bought in somewhere here, bought a bunch here. This is the first time when they were starting to buy more aggressively. We could see this from the volume signature. The volume signature increases, and then going below the support level, we are quickly rebounding, so there is some buying there. We see it here. We see it here. And then we see a lot of buying on the way up. So this was the first time. So it's a very interesting comment that Sharon has made. She said that some of them are selling and some of them are buying. So our goal is to define who's buying, who's selling. That's number one. And secondly, kind of like to create that story, that Wyckoffean story of what has happened here. So we are seeing value investors, and then we are seeing a spot like this. So let's look at what happens prior to that. We see a diminishing volume characteristic here. And as Wyckoffeans, we would be thinking, is this a possible phase C? And a lot of us probably would be thinking that way because of how volatility has diminished and so on and so forth. And we kind of see in the texture of the price and the texture of the volume as such as, asking for some kind of movement to the upside, a rally. The rally happens, and this bar shows us that there is still a lot of supply. And that tells us that this is not the correct timing. Supply is still present, and therefore there's going to be a retest of the support. To confirm that, supply comes later on in smaller quantities than the one that we had here on this spike, but after the upthrust, the price comes back. This was a really good trade to the downside. This trade is based on that increase of the effort into the resistance that was based on the automatic rally. And rejection of the price at this level. So this trade would be really easy. So now let's think about this trade and market participants. On the way up, probably ITFs, institutional trend followers, are getting into this position. Some other investors are also getting into this position. They are excited, probably some earnings, announcements, and so on and so forth. If the position does not go anywhere, what are they going to do? They're going to start giving up that position if they're not value investors, if they're trend followers. Is there a trend that has been established? No. Is there a break of the trend that has happened? Yes. And this is where they're going to give up this position. All right, so they've done this once. They got into this position and then got out, and they burned on that. All right, so what happens next? How about this area right here? Is that reminiscent of what has happened here?
Quite similar.
Yeah, quite similar. So we're looking for analogs, and the best analogs usually come within the same formation. because the behavior of market participants is current. It's the same market participants, so they might behave the same way. So from here, we are expecting some kind of rally, and this is a really nice rally because it takes time. It doesn't take like 1 week to get to the highs and then produce a lot of supply. But it takes a more considerable time, more thoughtful buying and accumulation. It overcomes the previous high. It actually overcomes the previous upthrusts, and then it spends some time above. So we see all of these signs as bullish signs. If I would be in this position right here, opening up, and I would be seeing this type of move, I would be extremely excited. Now, there is a couple of things missing there. Those are more details about the sign of strength rally itself, the way how we want to see that sign of rally. But there are more bullish signs. One of the other bullish signs that we see is actually in the ability of the price to stay above. So look at how it stays above anything of what we've seen before. We just don't have that type of staying power. Every time we try to stay, then something happens, we go down. Try to stay, go down. We do it here as well, but the way how it stays up, it's less volatile than what we've seen before. So that's also a good sign. And then when the price starts to go down because there is some supply that came in, who's going to give up this position? The trend followers, right? The ones that got in here. They did the same thing here, and then they give up here. They're doing it the same. Think about this as the analog to this, analogy to this would be, you play in a lottery, right? And you know that at some point, let's say the price will go up, but you just don't know when. You don't know when you're going to win. So you keep buying the lottery ticket. So here is one, here is a second one, here is a third lottery ticket. And then one of them is going to work out. Of course, we want to be more intelligent about our selection. And therefore, we are studying all of these patterns. But even today, I was reading some of the comments from a very famous trader who, I don't know whether he is a good trader or not, but, very popular trader. And one of his thoughts and ideas about trading was that trading has an element of luck. I don't necessarily subscribe to that idea. I would say that in poker, as a game, you have more variance, so luck plays a much bigger role than in investments, where decisions by what the price is going to do is based on the decisions of institutional participants and on the overall, participants like the Fed, the governments, and so on and so forth. So therefore, there is less of a luck that we could assign to investment, stock market investment, than, let's say, like any game like a poker, where the chance is really a chance of you don't know what card might come. You can calculate the probabilities, but you don't know exactly what card is going to come. So here we are kind of waiting for the same things to happen. But Sharon, something else is happening. Like it's almost like a different analog that now we're looking at. Now, if we would look at this structure by itself, and we would be thinking, okay, well, we have first structure, then we have a second structure, and then we have a third structure. So, and look how easy it is, by the way, guys. Divide it into phases. First structure, phase A. Second structure, phase B. Third structure, phase C. What are the intentions behind those phases? All right, well, here we're stopping the trend and we are testing. What are we testing? We are testing that stopping of a trend. Phase B tests again. What are we testing? We're testing phase A, testing phase A, and then phase C, again testing. What are we testing? We're testing phase B and phase A. but the structure is slightly different. So I wonder, Sharon, if because of those failures, and I'm just speculating here, right? So here is one failure for the trend followers. Here is another failure for trend followers. Maybe they are not considering this stock anymore as something very attractive. At least for some time, we don't see that, right? So we don't see the same type of structure that we've seen before.
Yeah,
But
the volatility has decreased.
I'm sorry, say again.
The volatility has decreased.
Yeah, there is such a decrease of volatility right here, right? So after they give up, it's almost like they're saying like, I don't want to go into this again. I don't want to make the same mistake for the third time. And this is where it just, takes off. All right, so let's analyze phase C and let's maybe define all of the Wyckoff points in there as well and define the phases within that phase C. So we're looking at this. Obviously, the first point of interest for us is this whole move to the downside. How would we label the low here?
Pardon me, that's the selling climax.
Absolutely. The first rally is going to be labeled as
the automatic reaction.
Automatic rally. So it comes here. And then we have like multiple tests here. So whatever test you're going to put here, that's fine. Let's just say phase A. And then where is our phase C?
And I don't think phase C comes there until mid-February.
Okay, so let's talk about phase C. I think there was a question from Simon on this. How would we describe phase C, Sharon? Give me all of the indications that we would be looking for to find phase C. What are we looking
Well, it looks like a spring.
Okay, so we are either looking for the structural spring, we're looking for the shakeout, or we're looking for the last point of support. If we're looking for the spring, because the shakeout seems like selling climax had like this shakeout characteristics, and we don't see that before. So it's probably either LPS or a spring. How would the spring look like? I mean, like what would be the volume signature and what would be the price signature?
Well, actually, the volumes, well, it increases a little bit, not
Yes.
as much as.
Okay, so it increases, and we could define that local increase that we usually say from phase B to phase C.
Mm-hmm.
Okay, so do we have that? Well, we have
Yes.
some increase in supply, right? And relative to phase B supply, let's say on average, we definitely have that. Okay, and then we also say would say that the volume would decrease from phase A to phase C, right? Because we want to see that absorption of supply by institutions throughout the whole structure. That's what we're seeing in this picture. And then we also would like to see a local volatility where weak hands are giving up their positions, so capitulating into phase C.
Well, that's definitely there.
And it's definitely there too. So we don't want that signature to be extremely high, but we want that signature to slightly increase relative to phase B and then decrease relative to phase A supply. And that's exactly what we have here. Okay, so we have a structural definition, a spring. And by the way, with this spring, look how nicely it just goes below the phase B level and then it just springs. You would not be expecting this spring necessarily with such shakeout and with such, assertion of the demand at the end into the close of the bar. It just basically tells you that there is so much value on this bar for big institutions that most likely once the price starts to go here, it's going to be picked up again and more aggressively. This was an extreme value for them. And that's why in one day, they kind of pulled it all up into the close. So if this happens again, most likely they're gonna buy much faster, and the price probably would not go to the low of the shakeout action. And we see that exactly. We see that sprint happening. So sprint number 3 here, or sprint number 2, whatever you define here. All right, so if this is then phase A, and we've defined this move as a sprint and potential phase C. Now the question here is, where is our entry, Sharon?
Probably on that candle, right, little gap candle right above the hammer.
I love this, yes. We could actually consider the sprint itself, because if we're talking about sprint number 3 by the rules, and we have to have a diminishing supply characteristic, which we have, by the way, relative to this move, right? So supply is diminishing, and then we have that that type of reversal bar. And then Sharon is absolutely right. This is a significant bar that reverses what? That reverses the last commitment to the downside. So we're thinking phase C, we're going to have something like this. So what we want to find is a bar that commits last to the downside. Okay, so we found it. Here it is. Then we would like to define a commitment line through which the significant bar to the upside should go through and close above. Here it is. And then we want to define that bar itself, right? So this would be a significant bar. We would prefer to have some volume signature behind it, because that would tell us that the demand is present and institutions are buying. Gap was just a bonus to that. It shows that definitely institutions are buyers. Why? Because gap is an overnight action, and only institutions are going to be so active in the overnight action, and we see that. So our first point of entry is just almost perfect. Our second point of entry probably would be on the next bar. Why? Well, because we're thinking about a sign of strength bar on a sign of strength rally. And we want to make sure that the sign of strength bar comes before resistance. This is really important. And we kind of see that with the sun power a little bit. And indeed, if we look at the resistance, it comes before the resistance. And then there is a second pocket of the resistance here. So there is a resistance cluster. So we could get into this position in 2 tranches on these 2 bars. So let's just say that 1/4 and then another 1/4 were opened. So we are 20 basis points into this position so far. Looks like a confirmation by the volume, looks like a confirmation by the relative strength, looks like it's trying to overcome the momentum as well after this low. So everything is confirming. Now, the biggest question at this point is going to be, how can we use our significant bar trend following tools, and how could we switch to the weekly bar? So let's look at where we are at on this particular day. So let's say this is February 14th, 9th, 12th. So this is the beginning of the week, Sharon. So we entered on Monday, and then we entered on Wednesday. So let's see how that week looks on the weekly bar.
Okay.
All right. And here we are. Here's this bar. Was that a reversal bar, Sharon?
Sort of. Maybe the hamburger was also part of maybe the 2 together were kind of a reversal.
Mm-hmm. Well, again, when we think about the reversal bar, we're thinking about the previous action, right? So here we go. We're thinking about the last commitment to the downside as a close. Okay, so here it is. Then we take the high of that bar as the commitment line, and then we want to see a bar that overcomes it and closes above that line. Do we have that?
Yes.
Absolutely, yes. Here's that last commitment bar, close our commitment line as the high of that bar, and look at this weekly bar. We have most definitely have reversed this last attempt to go down into phase C. And that's the key, guys, because we want to be in this position. We want to identify the phase, C phase, and then we want to identify the reaction that goes into that phase C. And we want to catch that reversal. And that's how we're catching the sprints, LPSs, and then shakeouts is a little bit different, but kind of the same logic. All right, Sharon. Well, now that we've identified our points of entry, and please note that on the daily, we actually had an entry here and here. So by the end of the week, we are going to have some profit. Where is our stop loss on these first two positions, Sharon?
Pardon me, I think down below that red bar.
Yeah, absolutely. That makes a lot of sense. This is where institutions came in and produced some buying. So if the price would go down and they bought at this level, most likely they're going to support this level just because the price comes back to their value point. And their bias is long-term to the upside, so therefore they're going to be looking at this as still a long-term campaign, and they would still be buying. And you would be thinking like, well, why would they be buying? Well, I've just shown you exactly kind of like the institutional way of how they would scale into the position. 25 basis points, another 25 basis points, and they only 1/2 into the position. So if the price goes down and they still believe that this is a good buy, they're going to buy another 25, they're going to buy another 25 until they are satisfied, with their position size. All right, well, now that we are on the weekly here, what I want to do is to get into this position again twice, Sharon. So let's come back to the daily. We have the stop loss on the weekly now. Let's go back to the daily and then find the other two entries. And then after that, jump back into the weekly. Okay, so here is our daily. Let's open bar by bar. And you just tell me, where do you think that we should be opening our next position?
Well, I guess you haven't progressed. Oh, I see. Okay, you're progressing it now.
Mm-hmm. I'm doing it bar by bar. Is this the bar where we would be thinking about adding to the position?
That would be a reasonable one.
So what is the reasoning here?
I guess once they tried to make it. I mean, they tried to go up on that last white bar and didn't quite make it. But then it tried to go down on the next bar and certainly didn't make it.
Mm-hmm. Yeah. So I kind of see the logic that you're going through. The main key is the overcoming the resistance point, right? So the last time we tried to do that, we couldn't do that. We were slightly better. And by the way, this is something that you guys, should be noticing as well. Look at the way how the price, tries to go up. And then look at the next attempt. Would you say that the second attempt was better? What do you think, Sharon?
Okay, I'm not sure exactly where you mean right now.
Okay, so we are looking at two scenarios. So we're looking at this.
Oh, that okay.
And then we're looking at this.
I think that's a little bit better, the second one.
But why is it better?
I guess because there isn't as much selling tail.
Right. Right. Okay. So, and we're probably looking, if we're looking at analog bars, we're probably looking at this bar right here, and we're probably looking at this bar.
Yeah.
Why? Well, because there are a lot of similarities there. Same price level, same volume spike, and then the same spread signature, right? So closing below the open. there is a difference here. There is more supply that comes in here. Then the question that we have here, oh boy, then why this is not happening right away after the test? The test is actually okay, and the supply drops almost instantly. Here, the test shows that supply is still present. I know, guys, this is kind of like a very small nuance, but it's a very big nuance on how the price actually gets out of the trading range, because it's always at the resistance that we're going to have the institutional sell zone, and a lot of them are going to sell into the strength. So we're seeing how in the second attempt, the test has a lower supply level, and then we have another commitment to the upside. So overall, second time was much better, and absorption has happened much better at this level. So when the price comes back to the same level, we would be expecting that supply would come, and we see that from the volume signature, but we also would be expecting that it will be more successful. And is it more successful? Yes, indeed. Um, Look at how this bar that has that volume spike on par with those previous instances does not do anything, and the price continues up, and it commits above. Indeed, there is a sell-in tail, and as Sharon has said, it has produced some supply signature, and then the next day there is definitely supply, but there is also a demand signature as well. Now, we would be thinking structurally here that we are in some kind of sign of strength, probably minus sign of strength, because we have a higher resistance right here. So maybe a higher major sign of strength is going to come later on. So we're thinking that maybe we're like in one half of this whole formation, and we could possibly maybe open another position right here. So we're thinking maybe like a smaller backing up action, LPS. So we need to think about what could happen here. The way, Sharon, how supply has come in tells me that maybe we should have a test. But because of all of the bullish characteristics, I don't mind actually entering here. And we would be thinking that the first low might potentially be a lower low in this kind of like smaller backing up consolidation, right? Minor sign of strength, minor backing up action, something like that. So I probably would be waiting for the test, but let's just assume that we bought in here. Where would you be stop loss?
Pardon me, probably down there below that moving average.
Mm-hmm. Yeah, makes a lot of sense just because of this bar right here that rests on the support of that moving average. We kind of see that the other two bars to the upside, they are smaller. So whatever buying is there, it has some weak hands characteristics, and therefore this reaction right here. So a logical place would be below the moving average, or rather would be below that significant bar that had this, pronounced movement to the upside. Okay, and we would still have the weekly stop loss just below, just at the $5 there. All right, let's go and see what happens next. Okay, inside bar, attempt to go up. Okay, so probably here is our retest here. We might have another bar here. That might be a smaller bar that is just going to kind of conclude our movement like this, and hopefully we're going to go up, or we might still stay in this area and might produce some more consolidation right here. It just depends. But we like how the level of supply has dropped. So another way to buy here would be just buying the breakout, right? So let's say maybe like at 725 or slightly above, we could buy that. Let's see what happens next. Okay, so here is that small bar. Guys, I did not see what has happened, so I'm just interpreting the way how I see this. But it's interesting how supply is diminishing more I would be okay buying here on the reversal, on the breakout. Everything is behaving nicely here. Here is that bar to the upside. I probably would be even timing the intraday entry here on the higher low on some intraday reversal. That would be the most aggressive speculative way to do that. And then my stop loss still probably would be somewhere associated with this bar. I don't want to, we already came in twice, so this would be the third entry, unless we're entering right here. So I still would be keeping the stop loss here. So my first position might be slight loss, my second position smaller loss, and my third position just a regular loss. So let's just see what happens. Okay, we could potentially buy that breakout as well. So for instance, the breakout out of the triangular formation, so this bar right here could be potentially be like that fourth entry that we have. So 1/4, 1/4, 1/4, and then 1/4. And we are entering exactly by the guidelines of the Wika trading course that we've created, right? So in phase C, we're going to look for the reversal, and then we're going to look in phase D for the sign of strength bar. We got that. Then we're going to look for the backing up reversal. We got that. And then we're going to look for the breakout of the backing up action, and we got that. And here is our 4 entries. Here we are. We are totally loaded into this position. Our stop loss is going to be still associated with this bar, and this is where all of our stop losses will be now. So let's notice this. So slightly below 6 on the weekly, and let's go back to the weekly. All right, Sharon. I'm sorry, this is daily. All right. So let's do this. Let's do it kind of like the way how we're doing it with the daily. So I think this is where we are, somewhere here. Sharon, so we said that our stop loss is going to be somewhere here at 5.5 for all of the positions. Now let's play this all the way. Let's say that our intention is just to catch a swing, right? So where are our targets? We're probably thinking what, these levels? Would you say?
Probably.
Yeah, so somewhere between 14 and 15. This is the area where we're gonna stop, listen, watch. Most likely our PNF is indicating the same level. The PNF count segment 1, segment 2, segment 3. Why? Again, look at the levels of supply. That's the most important thing for us to identify where the count goes to. It has to go to the climactic action, which is the local climactic action, or the final terminal climactic action for the overall trend. Sharon, are we moving the stop loss on this last bar?
Well, we could. Could move it up to about 6.
Let me redo this. Let me just do the arithmetic one. Is this a significant bar? I think that's the first question that we need to address. Is this significant?
I don't think in and of itself. I think it might be with another one, but
With another one, right. So maybe like in combination. So if we're going to move the stop loss, we're probably going to move it in combination. What, you know, kind of I'm not liking is that we usually would do the combination, or I call them combos, when you are going to have 2 semi-significant bars. So let's say something like this. And these 2 we are combining into 1. So instead of, let's say, a bar like this, like we had prior, we need to have 2 bars like this. Well, this first one does not really look that significant because we want the close to be above 1/2 of the spread. And, you know, it's somewhat there, but not really there. So we might as well just keep it here, or if we are aggressive, we might keep it below 6.5. These are our 2 levels. All right, Sharon, I'm gonna go with this bar by bar, and you tell me when you're going to move the stop loss. Are we moving it on this bar?
Yeah, I think I'd like to wait till the next one.
But is this a significant one?
Well, probably, yeah, except there is some of the selling tail.
Yes, but look at this.
Yeah,
These are the two significant bars. Are we closing above 1/2 of the spread? Yes. Um,
indeed.
do we still, yeah, there is still some supply that's coming in. Kind of natural. We are at this, level of the resistance. We had a lot of selling, around this area before. So we are testing some supplies coming in. We need to see how the absorption is going to happen. But could we move the stop loss? Yeah, we can. We usually would love to have the stop loss 2 levels away, and next class, we're going to talk about the stop loss, the time stop loss, the price stop loss, the volatility stop loss, and so on and so forth. So we could have an aggressive stop loss here, and I think that a more conservative stop loss would be 2 support levels away or 2 significant bar levels away.
Mm-hmm.
All right, well, that's great. So let's say that our stop loss is here or aggressive stop loss is here. Let's see what happens next. Are we moving the stop loss?
Uh,
Think about, is this a significant bar or not?
no.
Not. So we are not moving the stop loss. Let me ask you a different question. We said that there was a supply tail on the previous bar. Was that supply observed?
It's like a little bit of it was, maybe not all.
Well, think about this. If it wasn't observed, then the price would do what?
Um,
Think
go
about
down.
the instances of where that happens. So something like this, something like
Yeah,
this,
yeah, exactly. The price should probably decrease.
this. Yeah, so the price would go down. If supply is not observed, the price would go down. Instead, the price actually halts. Uh, and look at how we are having all of the indications of the momentum
Mm-hmm.
and outperformance. So that's great. Okay. We love to see that as the trade unfolds. All right, how about this bar? Are we moving the stop loss? I'm not asking about the supply yet. I'm asking about the stop loss.
Mm-hmm. Well, probably, maybe you might move it to the aggressive level or keep it where it is.
Okay. Um, let's go by the rules, right? Let's just say that we're just using significant bars, our first methodology.
Okay,
So
then we wouldn't
stop
move it.
loss methods, right? So first one significant bar away. Second method, and we'll talk about this more in the next class, 2 significant bars away.
Yeah,
Let's just kind of have those 2 ways. So
yeah. Just leave it where it is, I guess.
this is stop loss 2, this is stop loss 1. Let's play both. Okay, so we would not move the stop loss because this was not a significant bar, and this is not a significant bar to the upside. Now let's address the supply issue. Definitely a lot of supply. So
Yeah.
what are we doing here?
Um,
Supply occurs, what do we do?
not just watch it.
Yeah, we just wait. Thank you, Sharon. We are not selling right away unless our goal was a very, very short-term swing trade, which already it's 2 months into. Our
No.
goal is, to capture a more meaningful rally into like 14, 15 area, or at least above this area. We would be thinking also that maybe this is a sign of strength, major sign of strength, so we might be going into the backing up action. So I think that for aggressive position, you either need to get out of here for sure. Let's say once it hits 10, you go on the daily and then just see that reversal and get out of this position and just take that profit. That would be ×2 for you, 100% return in 2 months. This is a really good run, or close to that, maybe 80%. If you're a longer term investor, then exactly what Sharon said. We just observe. if the long-term trend is sustainable, and this is sustainability of the trend is going to be the focus of the December special. December special is going to be all about long-term campaigns and how we swing trade those as well. So we did intraday a couple of years ago. We did the swing. Now we're doing the long-term, and we're concluding this, and this is going to be offered as just like one package, Troika, right? So in threes. We have, some other products that we have also in threes. So a long-term investor, if there is a conviction of the long-term trend, and more importantly, is there conviction, institutional conviction of the long-term trends? I would say so. I mean, look at the volume signature, look at how the price reacts to that. And we just time two on the move like in, 2 months. That tells us that institutions have urgency to get into this position. We will be staying as long-term investors. Okay, so next bar, did we hit our stop loss?
No.
We're staying. Next bar, is this a significant bar? In the size, it is significant, right? So look at this. We want to identify all of those significant bars or combinations, and we have 4 of them now. So the stop loss, you could move the stop loss like this. But is this a significant bar that makes a commitment above the previous commitment line, which is defined here by this high? No. So we're not necessarily going to move the stop loss. We could keep it where it is right now. So aggressive here, conservative here. We want to see that commitment to the upside. Remember that Wyckoff himself said that we only want to move the stop loss when there is a confirmation of the commitment to the upside. By the way, that might have been Hank, because when I was discussing this with him, the movement of the stop loss, I thought that was his idea, developed as to when actually to move and where. But okay, all right, so we're just consolidating. Here we go. That's a big bar for us right there. And probably some points of entry, some add-ons that we could see in that area. Okay, so Sharon, what are we doing here? Are we moving the stop loss?
I wouldn't move it very much.
Well, let's think about this, right? This was the commitment line. Is this a significant bar?
Yeah, it is that.
Yeah, so we have that. We have a big body, and we also have 1/2 of the spread. I'm sorry, the close above 1/2 of the spread. It is a significant bar. It overcomes the previous commitment line. So we definitely would move the aggressive stop loss there, and we probably would be thinking not necessarily about this low for the conservative stop loss, but more about the low of this trading range. So here's our stop loss number 2, stop loss number 1. Okay, great. Nothing that we do here is different than what we've done here or here. Supply emerges, and as a long-term investor, what do? We just want to see if the conviction and sustainability of this trend is going to continue. So we stay in. Here we go. Nothing happens. No movement of the stop loss.
No.
Nothing happens. No movement of the stop loss. By the way, these 2 bars are actually showing us the test of the supply that came on that big bar on the first week of May. Is this a significant bar?
Yes.
Yes, absolutely. The body is significant, and the close is significant, and the close above the commitment line is significant as well. So therefore, this is the bar that we're looking for. Stop loss here, and then conservative stop loss here.
Yes.
All right, great. We're close to our area. We said 1415 long-term resistance based on IPO pricing. So we would be looking forward to see, price going into that area. nothing happens here. Some supply is coming in. We want to recognize that diminishing spread characteristic, but no movement of the stop losses as it is not a significant bar. Next bar. Is this a significant bar?
Somewhat more so, yes.
Yeah, the last bar is a significant bar. So we have 1, 2, 3, 4, 5, 6 significant weekly bars for us. And also we fall into this long-term resistance.
Yeah.
Okay, so also, and we're taking more time here than I wanted, but this is important, so let's conclude this. We'll practice this more next time as we talk about stop losses. Look at the texture with which the price moves first, and look at the texture with which the price moves now. Is there a difference?
Yeah, a little bit.
In which way?
Okay, you're getting a slight decrease in volume now.
Mm-hmm.
Yeah.
What about
there.
the price bars themselves? When you compare
Yeah,
one period to the second one, what's the difference?
yeah. I think more trend followers are coming in.
Yeah, there is more like aggression, aggro behavior, where they are pushing it much better, easier movement. The price travels price-wise more of a distance than originally. Took 2 months to go from $5 to $10. That's $5, and then from 9 to 14, the same $5. But we traveled there in like a month and 1 week. So ease of movement, momentum is increasing, velocity is increasing. We are seeing all of the positive signs. Institutions are getting in. We're close to that long-term resistance. When we are close to that target and we go into more of the speculative run, when momentum velocity increases and more participants are trying to get in, this is where we could expect some kind of mean reversion trade. This is where other institutions, value investors, are going to take some profits and they want to book them. So the key for us here is to go to the daily and become more aggressive with our stop loss. So let's do exactly that. We are in the second week of June. Let's switch to the daily. Here is that additional trading range that we've seen. Okay, so did I say second week of June, right? Yeah, here we are. Here we are. So we could be extremely aggressive here because we're seeing the speculative nature with which the price moves. And by the way, there was an add-on right here in this area. And we would be using the same principles of the significant bar as we used on the weekly. We could define, and let me just, again, do the arithmetic. Okay, here we go. We can define the significant bars. So here's our last significant bar, last commitment. This is going to be our aggressive stop loss. And then 2 significant bars away, I probably would be like thinking about maybe these 2 bars as semi-significant and stop loss somewhere in this area, so slightly below 11.5. So this would be a long-term investor. This would be more of a swing trader. You could be even more aggressive and even get out around this bar if you're a significant trader. If you're a swing trader. But you can wait and see how the price could take you out. So we're looking for something of a climactic run on the daily. We're also looking for the change of character on the daily, and we're looking for the change of character bar for the swing trader. All right, let's see if it's going to just take us out or if we could possibly gain a little bit more. So This kind of unfolds in a less attractive way for us, suggests some weakness, and suggests that we might actually see the move to the downside already. So we're probably seeing a climactic run here with the majority of the profit taken on this bar, and then we're seeing how that supply actually diminishes together with the demand as well. And it's that demand, demand fade and signature that could be the end of the move. And that's probably what we're seeing right here. So I think that the next bar could potentially just take us out with this stop loss. If I would see something like this, I probably would just get the stop, all of my stop losses, even aggressive up to here. We've done really well. Here is the point of entry. Here is the point of entry. Here is the point of entry. We could have entered here as well. So if we're exiting at, let's say, 12 and a half, about maybe 12.75, and we bought on average maybe around 7 and a half. So we've made this March, so about maybe like 70% return in what? 1, 2, 3, 4, in maybe 4.5 months. So this is an extremely good return because you have to think about annualized percent here, annualized P&L, and it's going to be astronomical. The key, obviously, is just to be in these positions always with all of your money plus leverage, and then you're using your capital efficiently and optimally. All right, well, let's see if it's going to take us out or not. Okay, probably did not take us out, so let's just assume that we're still in this position. And this is so nice because we might be wrong in our assessment, right? And we're still in this position. So now we're feeling like, okay, stop loss worked. This reaction, now that we're assessing it, was not that dangerous. So that's great. And we're trying to break out to the upside. If we're going to have another bar like this, we're going to move the stop loss more aggressively and just go with that aggression until we are out. So let's just go quickly here. We're a little bit beyond the time. Okay, so move the stop loss below this last bar. Move the stop loss below this significant bar again. So we are at 14 and a half. And this looks like now a more defined climactic run. So here we could be more aggressive and put it right below the last commitment to the upside, or still keep it at 14 and a half. One way or another, I think it would be good. We would be out here if we move the stop loss below the loss commitment. All right, so this seems to be a very interesting bar. So this looks, Sharon, like a bar like this, but slightly different volume signature, right? So there is some synchronicity now between the price and the volume, the price and effort, and this looks a little bit climactic. Okay, so our conservative stop loss is here and our position on the swing is out. So let's see how conservative stop loss would be hit. All right, so here we would be hit on the open. Okay, great. So I think this is the conclusion of that run. So opening positions here, some add-ons here that we didn't go through, and then the exit here and then here. And we kind of see that this is a change of character right there. And if that we don't recognize, then this is a change of character for sure. And this is the trade. This is the whole thing. So we're looking for the definition of the long-term position in the big trading range with the short-term Wyckoff labeling. We want to time it into phase C. We want to enter on the significant bars that are reversal bars. and then we want to use the trend following technique like significant bars to stay in the position until it gets us out. And that's it. That's the whole thing. Sharon, any questions?
No, not really.
Okay, well, let's pick this up next week where we left it off with the stop losses. We'll talk about the time stop loss, we'll talk about volatility stop loss, and so on and so forth. Sharon, really good job. Really good job. Yeah. So just keep doing it. Keep doing it. The more you do this, the more I see the skill has been elevated, which is very pleasing to me, you know. So keep practicing.
Okay.
All right. Thank you, Sharon. And thank you, guys. Thank you for sending your homework. Thank you for being active during the class. We're covering a lot of material, so it is really good. I'll see you next week. Don't forget about your bias exercise, and don't forget about the sun power exercise. Thank you, guys, and I'll see you next week. Bye-bye.